So all that corporate news aside, what is on everyone's mind is this FOMC meeting. Some are calling it, the most important meeting we've had in quite some time. Let's find out what James Garish from Shaw Partners and Market Matters is thinking. James, hi. With this hanging over markets, it's pretty incredible, that we're seeing sentiment improving right now. Are we just setting ourselves up for a big disappointment? How do you think it's going to play out?
That's a very glass half empty attitude there, Nadine. I mean, if you think about what's playing out in markets and what we've seen over the last week or so is that central banks have come out and basically backstopped the banking system. So you could argue that they've learnt their lessons from the GFC and the collapse of Lehman Brothers and Bear Stearns and the like, and they're not going to let that happen a second time. So you've got a situation where regulators are backstopping the banking system. You've got the Federal Reserve and other central banks globally are going to take their foot off the accelerator of interest rate hikes. So, we're priced in another rate hike by the Fed this week. The RBA are priced to pause when they next meet early next month. So, whatever the case, whether or not we get a hike this week or they do pause, they're going to signal that a pause is just around the corner. So, that's going to be a dovish hike if it plays out. So you've got a situation where central banks have done the heavy lifting around interest rates. So I think this is, I can understand why the market's rallying on the back of this.
Yeah, okay. So there we go. We'll see what happens when Jerome Powell speaks, and we'll know it by this time tomorrow. But it has been an incredible time. UBS forced takeover of Credit Suisse. AT1 bondholders wiped out, even though it was in the fine print. Many say that it starts a really dangerous precedent. What does it mean? I mean, have you had clients calling you about what it means for bank hybrids here in Australia?
Yeah, a heap of it, Nadine. So, which is understandable, concern around how regulators are treating hybrids. So, they're slightly different over in Europe. So the conditions around there are different. As you may mention there was fine print that this could happen in the event that a bailout took place. So, it shouldn't. The European situation is very, very different to what plays out in terms of ASX listed hybrids here, particularly from the regulated Aussie banks and insurance companies. So we've had a lot of questions around it. There's no doubt there's a lot of confusion out there, but I just stress that it is that the securities are different in nature. They've got different conditions in them, and Aussie banks are incredibly well capitalised institutions, which is ultimately what we're exposed to. The underlying security of the issuing company is front and centre when thinking about these things, Nadine.
Yeah, and our banks are different, and I think we can say that with confidence. So, is that enough though to make you want to put your clients into hybrids? I mean, how do you look at the risk reward on offer for hybrids, and do you think that we might see a sort of dearth of these new ones coming to market?
Yeah, there's not a lot of new issuance in the pipeline. So the already listed ones, you rightly point out they've been under a little bit of pressure. But to put that in the context, I was looking at we've got a number of holdings across hybrid holdings across portfolios. The average move this week has been down about 1%. So it hasn't been a significant move. When prices go down, yields go up. So if you think of the margin over the bank bill swap rate, which hybrids are priced on, that's moved from really low levels, about 2.2%, up to about 3%, which is more historic levels. So during the pandemic, that level got up to about 7%. So there is, they do move around on the ebbs and flows of risk sentiment in the market, the dynamics of demand and supply, what credit markets and risk is pricing. But ultimately, I think hybrids from a risk reward perspective stack up right now. They're a major bank tier one hybrid with 5 years to maturity is now offering something like 6.5% in terms of their yield to first call date. And we know the difference in Aussie hybrids is that call dates actually mean something, whereas over in the Europe they perhaps don't have as much validity.
Okay. When you think about stocks right now, are you seeing opportunities emerging in any particular sector. Gold has obviously been getting a lot of focus this week, although the gloss clearly coming off over the past couple of sessions. I mean, iron ore, we've got China looking to really clamp down on the rising price of iron ore. Just give us some sort of a flavor as to where you're thinking opportunities might be emerging.
Yeah, so you touched on a couple of topical sectors there. So gold, like at medium term, I think it's only a matter of time before it pushes through that 2,000 US an ounce mark. But it's been obviously stubborn in the last 24 hours. It pulled back $40 overnight, a couple of percent. It's going to be very volatile in the short term, and dictated by what plays out in terms of the US dollar. So to me, I think I'm a little bit more neutral in the gold space in the short term, but I think in the medium to longer term, I'm really bullish on that space. I think the US dollar over time will track lower, and that'll be supportive of the gold price. Iron ore, more neutral at these current levels. It's been really resilient. I'm more of a buyer of weakness of things rather than things that have held up really well and have factored in a lot of upside already. So those things would be in the coal space. Coal stocks have been absolutely hammered in the last little while, so that's obviously been it's been a very topical area over the last 12 months. It's been come back and declined in recent months, but I think there's opportunity there. New Hope came out yesterday with a really positive first half update. So, and in the other areas of the market, so property is probably in the short term a little bit muted, but seeing some reasonable opportunities in the medium term. Dexus in the office space, no one likes, but we've recently bought. And AGL Energy would be one I'd call out as well. That's a little bit more defensive in nature, not as aligned with the market, or not as high beta in terms of market exposures than other stocks. So there'd be a couple of interesting things I'd point your viewers to, Nadine.